I love the title of your latest note, which talks about how the second quarter momentum can really carry the stock through into the second half. What are the fundamentals driving that momentum?
So they've been investing a lot actually in tools in the background to improve recommendations for the users, to make tools for advertisers to upload product catalogs and things like that. So we're seeing momentum there in terms of how these tools are actually helping them scale both usage and revenue. And yes, the momentum should continue in the second half. The difference though is going to be last quarter, that strength was a surprise. This second half, it's going to be an expectation.
So you talk about scaling. When do we expect them to start scaling?
It's still an investment year for Pinterest, despite of their strong quarter that they reported last year. And it's mostly because, you know, the strength in international, the ARPU differential that they have to its peers, and also conversion of some of these new ad units, video being one of them, it'll take time. You know, basically 2020 is what they're really priming the pump for. And in international markets, like you can see strength coming from Canada, from Western Europe, and those things would actually add up to the 2020 expectations. So they're really setting themselves up well for 2020. That does come with some volatility in the second half as they ramp up and sort of prepare for that.
And one thing that sets out Pinterest from some of its other peers is that profitability is visible. When
Absolutely.
do we expect them to turn a profit?
So on an adjusted EBITDA basis, it should be next year. It'll take a couple of years from a GAAP basis, but like you said, you know, compared to other names, the visibility was definitely higher in Pinterest, and really they have shown that they can manage these costs well, and that's what sort of perception change that happened. Now, can they hold that perception in the second half? That's a question mark, but given the investment year, I won't be surprised if there is some volatility there. But as a business model in general, because it's an ad-driven business model, you know, longer-term margins should be high.
And given the path to profitability, how has that been reflected in the valuation relative to its peers?
And that's a good point, and that's one of the reasons why you see hesitation from a consensus standpoint, because yes, it's a good, strong, long-term growth story, but at the same time, the valuation is higher than its peers. We have seen a correction in the stock in the last couple of months that has brought it down, but it's still higher. So it's gonna have to show that consistency and more confidence in that long-term story, that, you know, opportunities that are presented in front of them before consistently sort of like justifying that valuation.